Testing one, two, three. Testing one, two, three. Go. Here we're going to take a look at a problem in chapter 1. It's problem 144, PF 1-44A, preparing financial statements. In this problem, it states that Picture Perfect Photography works weddings and prom type parties. The balance of Williamson capital was $16,000 at December 31st, 2023. At December 31st, 2024, the business's accounting records show these balances. You have insurance expense at $6,000, cash 42,000, accounts payable 11,000, advertising expense 4,000, service revenue 75,000, Williamson's withdrawals, meaning that the owner withdrew $8,000 from capital. You have accounts receivable at 13,000, notes payable 14,000. The capital at the end on December 31st, 2024 is one that we're going to figure out together. Salaries expense 25,000, equipment 46,000, owner contribution 28,000. So here in this problem, you're going to prepare the financial statements for Picture Perfect Photography. A, income statement for the year ended December 31st, 2024. B, statement of owner's equity for the year ended December 31st, 2024. And C, we're going to prepare a balance sheet, the balance sheet as of December 31st, December 31st, 2024. So here we know that the ending capital should be $76,000. So let's prepare the income statement, statement of owner's equity, and balance sheet for this problem. So we're going to prepare the income statement. Income statement year ended December 31st, 2024. So because this is the income statement, you will have your revenue and expenses, and you should have either a net income or a net loss. So we start with the revenue. The revenue is $75,000. I'm sorry. Let's start again. You have your revenue. So you have service revenue. Okay, for the sake of time, I went ahead and completed the Excel spreadsheet for this problem 144A. So this is the income statement. You have your revenue, which is service revenue of $75,000. You got it from here. Salaries expense, 25,000. Insurance expense, 6,000. Advertising expense, 4,000. So when you add these total expenses, you should get $35,000. And to find your net income or net loss, what you do is you subtract your expenses from your revenue. So the revenue is $75,000 and your total expenses is $35,000. So when you subtract these two, you have a net income of $40,000. Now, if the expenses exceeded the revenue, then you know you would have a net loss. But in this problem, there's a net income of $40,000. The second part of the question is for you to complete the statement of owner's equity. So Williamson equity at the end of December 31st, 2023 is 16,000. Owner contribution, 28,000. Net income is 40,000. When you add the total, you should get $84,000. And in this problem, Williamson withdrew $8,000. So you subtract your withdrawal from the 84,000 and you should get $76,000. In part 3, part C, you should complete the balance sheet for the company. So you have cash at $42,000, your assets. You always list your assets first. Cash is $42,000. Accounts receivable is $13,000 and equipment is $46,000. Your liabilities, accounts payable, $11,000. Notes payable, $14,000. Your total liabilities is $25,000. Owner's equity is $76,000. So your total liabilities and owner's equity is $101,000. Your total assets is $101,000. So your assets plus your liabilities plus your owner equity will equate to the accounting equation. Again, the accounting equation is assets equal liabilities plus owner's equity. Your total assets is $101,000. Total liabilities is $25,000. Capital is $76,000. Okay, so when you add these two, the liabilities plus the owner's equity, you get a total of 101. So your assets is equal to your liabilities plus owner's equity.